action in Iran did drive the markets again this week. Everything else was kind of secondary. Oil's been sitting above $100 a barrel since the U.S. moved to block the Strait of Hormuz. And that really matters for rates because higher oil means higher inflation expectations, which is not good for mortgage rates. And the ceiling on how much rates can improve is really tied to whether or not that strait reopens. Good news is that it looks like a deal is closer than it has been at any point in the conflict so far. We got a report from Axios midweek that said the U.S. put together a 14-point peace proposal on the table, and Iran's reviewing it. The framework basically would declare an end to the war, kick off 30 days of negotiations where they reopen the strait, then limit Iran's nuclear program, and then gradually lift U.S. sanctions. There were some strikes, though, exchanged basically yesterday and today, with both sides blaming the other, but Trump called it a love tap and said the ceasefire is still in effect. Markets seem to believe him. You can make your own decisions. Oil's lower today than it was Monday, and that has helped mortgage bonds. But on jobs, it was, jobs week. So the picture we got was kind of mixed at best. JOLTS, that's job openings and labor turnover survey, it showed job openings are still trending down. And Challenger job cuts for April came in at 83,000. That's the highest April we've seen since 2009 when I first got in this business. And the main driver was really AI-related layoffs. ADP also showed 109,000 jobs created, but most were part-time and lower-paying jobs, and more than half came from education and health, which is not exactly a sign of economic strength. And today, we got the BLS report that showed 115,000 jobs created, almost double what was expected, but the headline's pretty misleading. And the household survey, which measures actual employment kind of differently than the payroll count does, showed 226,000 job losses. And that's the fourth straight month of losses in that survey, with almost 1.5 million losses on the year. Full-time jobs fell by 424,000, and part-time jobs picked up by 123,000. So the U6 unemployment rate, which captures people that are working part-time for economic reasons and people who've stopped looking and some other things, ticked up to 8.2 from 8%. Earnings were lighter than expected too, and the market basically didn't care about the report. BLS has been completely unreliable for a while now, and all eyes are really on Iran. On the product side, I saw credit bureaus and some portals had a notable leak. There was a new platform called MyFreeScore Now that launched a tri-bureau credit access for ITIN borrowers, foreign nationals, and people with thin files as far as credit history goes, if they don't have a social security number. But if you work with that population at all, it's worth knowing about. Feel free to reach out if you've got any questions. Next week, we're going to get CPI, PPI, and existing home sales. CPI and PPI are just inflation readings that are going to matter. But if Iran news breaks one way or the other, or we have big news over the weekend, that's really going to drive everything. I'll update you next Friday.